So let's start.
Yeah. Please tell me your name and what you do.
My name is Francesco Mazzola, and I'm an assistant professor of finance here at ESCP Business School in the Turin campus. And here in Turin, I teach financial markets and institutions, investment banking, besides some MBA level courses, behavioral finance, and fintech. So my research revolves around the way financial intermediaries support either household financing, but also business growth, with a particular focus on regulation in new competitive landscapes, where new companies such as fintech and non-bank intermediaries more generally have gained substantial market shares. Okay? All this may have significant implications for competition and financial stability.
Professor Mazzola, in simple terms, what is open banking and why should people care about it?
So open banking is a new system, it's a new infrastructure where banks share customers' financial data with third-party companies like fintech apps in a secure and controlled way upon customer consent. And this allows people to access better financial services such as budgeting tools or easier payments, personalized loan, investment offers, but also facilitate payments, also known as these pay by bank, direct payments from your bank account without needing a card, and more competition.
Your research found that consumer trust is a major factor in open banking adoption. Why do you think trust matters more than traditional financial factors?
In our paper, we examined the drivers of the launch of open banking policies and show that customer trust in sharing their data with fintechs is associated with early implementation of open banking policies. And intuitively, consumer willingness to share their data increases the potential benefit of these policies, as people being more willing to share their financial data is crucial to the operation of open banking. And let me remind you that without consumers' consent, data cannot be shared under open banking. Other country characteristics are less predictive for adoption, including economic and financial development or levels of innovation or quality of local institutions.
How is open banking changing the way we manage our money on a daily basis?
So open banking is transforming how we manage money by making financial services more connected, personalized, and even more efficient. It allows different apps and services to securely access banking data, or helping users tracking spending, automatic savings, and make payments more seamless. Quick example, prototypical use case of open banking is a financial advice product, such as a financial account aggregation, which works as follows. Think about a consumer which might have financial accounts scattered across several financial intermediaries, their bank accounts, several credit cards, a mortgage, an investment account, and so on. With open banking, fintechs can access and aggregate all these separate accounts to provide a customized financial advice on terms of savings or credit management or budgeting. Some examples of companies are SaltEdge or Think in the UK, and so on and so forth.
Your research highlights that open banking boosts fintech innovation. What is one of the most exciting innovations you've seen?
So one of the biggest challenges for small businesses is cash flow management. Okay, waiting weeks for invoices to be paid can create serious financial financial strain. Open banking is changing this with real-time cash flow tracking and instant invoice financing. So instead of waiting, for example, 30, 60 days for an invoice to be paid, basically fintech services like Fundthrough or Market Finance apps can use open banking to analyze a business financial health and offer immediate financing based on these pending invoices.
You mentioned a financial inclusion paradox. How can regulators and businesses make open banking work for everyone and not just the digitally savvy?
Regulators can actually mandate simpler user experiences, so they can require banks and fintechs to offer easy-to-use or jargon-free interfaces, but also strengthen consumer protections. Okay, so provide clear rules on fraud prevention, liability, or dispute resolution to boost trust, for example.
Fast forward 5 years, what is the biggest shift we will see because of open banking?
In 5 years, I think open banking will evolve into something else, open finance, which is basically where financial services are deeply embedded into our daily lives. And this is beyond traditional banks and apps. Think about insurance or investment or pension choices. So banking will become something invisible or seamless and fully personalized.
For business leaders and fintech founders watching, what is the one takeaway from your research that they should act on?
I think two main points. One is identifying the biggest customer friction points. So what mainly financial struggles do your users are facing, for example, high interest loans or forgotten subscription or complex payments, and act directly on that. And the second point is more on collaborate. Don't build alone your business, so partner with banks, other fintechs. Open banking app can speed up this go-to-market, but also integrate best-in-class services.